I once sat in a Honda dealership parking lot for 40 minutes, refreshing my credit app like it owed me money. I had just signed the paperwork on a used Civic, and somewhere on the internet I had read that a hard inquiry costs you exactly 3 FICO points. So I sat there, engine off, phone at 18%, waiting to watch my score drop by 3, because I needed to see the machine do the thing the internet promised it would do. It didn't drop 3 points. It dropped 1. And that 1 point bothered me more than 3 ever could have, because it meant the number I had been treating as a law of physics was just made up. Before we get into why, if you like this kind of thing, the unglamorous truth about how personal finance actually works, hit that like button, share this with whoever in your life is currently spiraling over a credit pull, and subscribe to Beth Builds Wealth so the next one finds you. It honestly helps more than you'd think. Okay, onward. That little gap between the 3 points everyone repeats and the 1 point that actually showed up is the whole reason I wanted to talk about this. The exact 3 points rule is one of the most confidently wrong things people say about credit. And once you see why it's wrong, the entire hard inquiry panic kind of falls apart. Here's what the people who build the score actually say. According to FICO, the company whose math decides most of these numbers, a single hard inquiry usually pulls fewer than 5 points off your score. Not exactly 3, fewer than 5. And for a lot of people with a solid history, it's closer to 2 or 1 or nothing at all. Some people apply for a card, take the hit, and their score doesn't move a single point. FICO, not Vantage Score, is the model most lenders actually pull when you apply for credit, which is worth knowing because the two can land differently. The reason there's no fixed number is that the inquiry isn't being subtracted like a parking ticket. The score is looking at your whole file and asking one question. Does this new application make this person look riskier than they did yesterday? If you have 10 years of on-time payments and low balances, the answer is basically no, and the math shrugs. If your file is thin and your balances are high, the answer is maybe, and the hit lands harder. And while we're clearing up myths, checking your own score does nothing. When you pull your own credit, or when a card company pre-approves you with one of those mailers, that's a soft inquiry, and soft inquiries are invisible to your score. You could check your number every single day and it wouldn't cost you a thing. So those 40 minutes I spent refreshing that app, the refreshing itself was free. The waiting was the expensive part. Now, bigger can mean genuinely bigger. There are real situations where a single inquiry knocks off 10, even 15 points. It happens when other things are already working against you. If your credit card utilization is sitting above 70%, meaning you're using most of your available limit, the model already sees someone stretched thin, and a new application lands harder. Same story if you've had a late payment in the last 6 months, or if your credit file is younger than a year old and there just isn't much history for the algorithm to lean on. So the person online swearing it's 3 points and the person swearing it tanked their score by 15 are both telling the truth. They just have completely different files. The number was never about the inquiry. It was always about you. Which, if you're the kind of person who checks their score on a Tuesday for no reason, and I see you, that was me in the Honda lot, is actually good news. It means the inquiry is the smallest, most forgettable part of this. Inquiries make up about 10% of your FICO score. 10. The other 90% is mostly your payment history and how much of your available credit you're using. You could lose sleep over a 3-point inquiry and completely ignore the credit card balance quietly doing 30 times the damage. Craig Watts, who spent years as a public affairs manager at FICO, used to point out how strange it is that inquiries attract this much attention when they're such a tiny slice of the score. He was right, and people still don't listen. There's also a timer on the whole thing that nobody mentions. A hard inquiry sits on your credit report, held by the 3 major credit bureaus, Equifax, Experian, and TransUnion, for 2 years, so you'll see it there, looking permanent. But it only affects your FICO score for 12 months. After a year, it's still visible, but it stops counting. And most people see their score climb back to where it started within 3 to 6 months anyway, as long as they're paying on time. The drop you're staring at in the parking lot is already fading before you've made the second payment. Here's the part that actually saves people money, and almost nobody knows it. If you're shopping for a mortgage, a car loan, or a student loan, the scoring models expect you to compare offers, so they protect you twice over. First, FICO ignores those mortgage, auto, and student loan inquiries completely for the 30 days right before it calculates your score. Find your loan inside that window, and all the shopping you did doesn't touch your number at all. Past those 30 days, a second layer kicks in. Same type inquiries get rolled together and counted as one. Apply to 5 mortgage lenders in the same stretch, and FICO treats it as a single inquiry, not 5. For the newer FICO models, that grouping window is 45 days. For the older ones, it's 14. The catch, and it's a real catch, is that all of this only applies to those big loans. Credit cards don't get the discount. Apply for 4 cards in one afternoon to chase sign-up bonuses, and that's 4 separate inquiries, each one its own little ding. The Consumer Financial Protection Bureau, the CFPB, actually has guidance on all of this if you want the regulatory version. But the short answer is the same. Rate shopping for big loans is protected. Card applications are not. There's one number that does earn a little caution. FICO's own research found that people with 6 or more inquiries on their reports can be up to 8 times more likely to file for bankruptcy than people with none. That's not the inquiries causing it. It's the inquiries revealing it. 6 applications in a short window is the financial version of knocking on every door on the street asking for money. The score isn't punishing the knock, it's noticing the pattern. If this cleared a few things up for you, do me one favor before you go. Like the video, share it with the friend who swore to you it was exactly 3 points, and subscribe to Beth Builds Wealth so you don't miss the next one. That's it. That's the whole ask. I think about that Honda parking lot more than I should. Not because of the car, the Civic was fine. It had a small dent in the rear bumper the dealer swore was character. I think about it because I spent 40 minutes treating a 1-point dip like a medical emergency, while the actual story of my credit was being written by the stuff I wasn't watching at all. The on-time payments, the balance I let creep up that summer. The inquiry I was so afraid of had aged off and stopped counting before I'd even finished paying off the floor mats. 3 points was never the rule. There was never a rule. There was just me in a parking lot, waiting for a number to do something it was never going to do. And if you've got a few more minutes, stick around. There's a whole stack of videos on this channel about the quiet, unglamorous stuff that actually moves your money, the kind nobody puts on a billboard. I'd start with the one on compound interest because it's the key to building long-term wealth, retiring comfortably, and protecting your money from being eroded by inflation. I'll see you in that one.